Hello, it's Simon here from Today, and I'm here to introduce what my blog's about and do a short video of some of the things that have made me consistently profitable for the last 6 months, which is the goal of any trader. That is how to be consistently profitable. I'm doing this blog to give you an insight into some of the things we do at Today, but also hopefully it will be able to help you as a standalone basis, because that's one of the reasons I became a moderator at Today, was to help people achieve consistent profitability. So whether or not you're a member or not, hopefully this blog will give you some assistance in achieving that goal. I started trading in August 2011. I did what most traders do: make a bit of money, give it back. Unfortunately, I never blew any accounts or anything like that, and I took advantage of quite a lot of introductory offers which offset a lot of my losses. And with some shares I held in real life, I managed to come out with a profit of about £800, which is what I started to trade with when I decided to learn how to do it for real. So I was always trading with profit, which is psychologically quite an important thing. Fortunately, I was always quite critical of any magic system or anything that promised to make it easy, as I always thought it was probably going to be hard work like any skill, so I never got suckered into paying lots of money for a magic forex system, which, of course, hopefully we all know doesn't work. So I decided to look for something or someone that was a bit more realistic, and I found Mike and exchanged some emails with him and attended some of his training sessions that he did for free. And he pretty much said you need to do it for the right reasons, and it's a difficult journey, and it's a marathon, not a sprint. And that was always my view of learning how to trade consistently and consistently profitably. So very much on my wavelength. So I joined when he set the site up in February, and ever since then I've been going in the right direction. My whole view and my whole approach to trading changed. I went about it in an objective and a structured way in order to achieve the things I wanted to. I started to treat trading like a business and from a professional point of view. And we'll have a look at how I did it and look at the components which make a consistently profitable trader and the ones that I've used in order to become one. The end goal of every trader is consistent profitability, and it's something that eludes 95% of people because they don't know how to go about getting towards it. And these components are what I believe and what are proven to get towards consistent profitability. Firstly, we have to treat trading like a business. We have to have a professional approach to trading. It's just as if we were trying to learn any other skill or any occupation. We wouldn't jump in with 2 feet and just try and blag away through things. We would take a structured and planned approach to doing things. So the key was in that last sentence. Planning is one of the most important things to do when it comes to treating trading like a business. This starts from having an overall business plan that defines why you want to trade, where you want to be, what your goals are, and what the eventual trader you're going to be looks like. It covers your methodology, what strategies you're going to use in order to have an edge and make money consistently over a series of trades. It covers things, how you're going to take profit, what your weekly targets are going to be, and it also covers contingencies for when things don't go so well. How many points will you lose in a day before you stop? Will you reduce your stake size till you get back into the zone and back in the flow of the market? And things like that. It's basically planning for every eventuality, both the positive and the negative. And it also covers our daily planning, which revolves around what setups we're going to be taking if the market offers them. The next part we go on to is changing the way we think, which is trading psychology, and this is one of the hardest parts of becoming a consistently profitable trader. I can't really do anything other than scratch the surface on a short video like this, but needless to say, if you can't change the way you think and can't master yourself, then you will not make it as a trader. The way we achieve success in our normal lives, in our work environment and other things often has no place in the market, and it's extremely difficult to reprogram the way we think in order to achieve success in the market environment. People don't like to change, they don't like to accept they've got no control over the market, and they're not willing to change from thinking in right and wrong. We emphasise trading psychology at Today more than pretty much everything else, and that was one of the main reasons I was attracted to this site in the first place. The next thing we need to do is make sure we're recording our trades in detail in order to help us develop. You'd be amazed how few people actually keep records. And this is what we're talking about, an Excel spreadsheet where we can see all the pertinent data at a glance. Shows us the date, what type of trade we're taking, direction, time, what our stop was, whether we locked in profit, pounds per point, our total risk, how many points are made, our cumulative points, and our accounts and trade profit and loss. Then above we've got our equity curve, which is that's what we want to see, a nice smooth equity curve with only a little bit of drawdown that we expect from trading, basic pie chart, and then some data over here. This is actually an old spreadsheet. The ones we use at the moment are much more detailed, but this one's easy to understand at a glance for this video. And the main benefit of record keeping is that we're able to then analyse the results. This allows us to see which strategies are working best for us in which market conditions, what our trading personality is like, what are areas of weakness, are we leaving too much profit on the table, are we bringing our stops in too tight that are stopping us out. So it's quite amazing when you think that most retail traders don't bother recording the trades in any sort of detail, but it's an essential thing to do for analysis. And another thing we need to do in trading is have some honest self-reflection, which we don't tend to do in real life. We don't tend to react very well as people when people are critical of the things that we're not so good at. But in the trading environment, it's not as likely that we're going to have someone else to tell us our shortfalls, our weaknesses, and look at other areas that we're not comfortable at looking at. When you are a member of a site like this, you can use the forum, you can post as much or as little as you want, so you can become accountable and have other people look into your trading personality and things like that for you, but no one can force you to do that. So if you've got any sort of ego, or you're not willing to accept that you're not perfect, or you've got areas to improve on, and you won't have honest self-reflection and stop punishing yourself for making mistakes and think of it more constructively, then you really are going to struggle trading. And it's about having that attitude of constantly wanting to improve and constantly wanting to get better, which is why it's a process that goes in a cycle. You can always keep tweaking each aspect of it and always keep working on each aspect of it, some more than others. Once you do some detailed record keeping, then it becomes a point where you can over-record data and do too much analysis. But in terms of treating things like a business, trading psychology and self-reflection and constant improvement, those things are always ongoing. So now I'll have a look at a few trades I took last month and talk about things like trade management, the reason I've got into them, where my stop loss is, where I'm going to take profit, and other relevant things whilst we're planning and in a trade. So this was Friday the 14th, and this was the end of a really strong rally that occurred over a couple of days. You can see at the bottom of the screen just above the profit and loss, Thursday the 13th and Friday the 14th, that sort of transparent green graph shows you how the market rallied. And people were just getting destroyed trying to short a rallying market again and again and again. It's like when you try and go long in a market that's falling, they call it trying to catch a falling knife. Well, this is the opposite scenario. So for me, I wanted to see a decent sell-off and some profit taking, which you can expect as different traders have different terms of view. So I wanted to see a decent sell-off before I decided to go short. I got in a little bit late, but you can see that the momentum's still strong. There's lots of red moving averages pointing down. We're seeing lower lows be set every minute or less. And fast forwarding it slightly, you can always see the time in the top right hand of these graphs. You can see that eventually we start going into profit. We're making lower lows and the momentum still with the market. It's quite a nice strong sell off this. You can see by the length of the candles, the 5-minute candles, these. And you may have noticed that I've got my deal ticket there. I'm running a manual stop with this as I'm disciplined enough to take stops. I do often run stop losses, but very often I'll do a manual stop as well, because I tend to trade on quite a short-term basis, intraday trading, so I don't need to leave the computer screen generally when I trade. And whilst I'm thinking what potential profit have I got with this trade, I'm also thinking, where's the first part that the trade will tell me I'm invalid? I wouldn't let this go against me much before I'd kill the trade and decide it's invalid. A lot of people can get married to trades and stay in trades for the wrong reason, and I've no doubt you watching this have let a small loss turn into a big loss because you've not taken a stop when you should have. Well, my solution is to think from the point of view as when is the trade first invalid, and then I'll take a stop without any hesitation, as we'll see when I show a losing trade or two coming up. And we can see, moving on slightly forward, that the trade's still going in my favour. So now what one needs to think of is, where do we take profit? Do we scale out, which a lot of times I do and a lot of professional traders advocate, or do we stay in the full position and just take a set number? My daily target was nearly met at this point, so I was quite happy once I saw it to complete the daily target to take it. So in these circumstances, that was my exit strategy, rather than wanting to scale out and seeing if the market had any more. It did go down at a few more points, but I was happy enough with the profit. And remember, profit's only a profit if you take it. And leaving money on the table and letting it turn into a loss is a source of great frustration, as I'm sure you've done before, because I certainly have when I first started. And so I'm happy enough to close my trade here for a nice profit. So we trade with the trend, and we also trade counter trend. So we have strategies for different market conditions, and this is a counter trend strategy. And this one takes a little more time to play out. So we've laid a few more 5-minute candles here, but we're starting to see the price roll over to the direction I want it to go. You can see by the moving averages they're starting to turn over, particularly the red 12 EMA that's starting to flatten out and turn over. Because it's a longer trade, I am running an automated stop loss, and I'm wondering if you can figure out where my stop loss would be. If you've answered if the market makes a new high, then you're exactly right. My stop loss is just above 43.3, 44, so roughly I'm risking 10 points, but I also am wanting to gain 10 points, so a 1-to-1 risk-to-reward ratio on this trade. So a few more candles later, and the market's starting to go in my direction. So we always need to be considering what's the market telling us. At the moment the market's telling us it's wanting to lay lots of red candles, which of course means over that time period that it's closed lower than it started. So we see the moving averages have all crossed and we're starting to face downwards. So I'm quite happy to stay in the trade, and I'm quite confident that my 10-point limit will be hit. At this stage I might add, when I'm a few points into the trade, I wouldn't let it turn into a losing trade now. I'd either take some profit off the table if it started to go against me, or I would take a break-even trade. So essentially I'm in a risk-free trade now, as I will have my stop at least break-even or perhaps even positive equity. Which, going back to the components of a successful trader, this is in my business plan. I take risk-free trades where the market allows. And the market eventually comes down and hits my limit. I'd actually traded twice. I'd gone long from the open as well, so that was me done for the day. I'd made my money in an hour and 20 minutes, which was quite nice. Doesn't always happen, but sometimes you get the opportunities quite early on, and it was time to go and do something else. I won't be sitting around watching the market for the rest of the day, risking my money back. It's about trading like a business. Once I've made my money for the day or week, then that's me done. And equally, I don't worry where the market goes down from here. I'll watch it and see, but if the market had gone and made lower lows and gone down to 30 points, it wouldn't have bothered me. It'll do what it wants, and I'm quite happy to take a part of the opportunity. You can see it's making lower lows here, but like I say, I've made my targets for the day, and it doesn't bother me what happens next. So this is a losing trade. I'm just setting up the deal ticket beforehand and preparing myself for the trade. I've decided that invalidation will be 4 points away from entry if I get the entry I want, and if it works I have a potential to get 10. So quite a good risk-to-reward ratio if it comes off in my favour there. So I'm quite pleased that I only need to spend 4 points to find out I'm wrong in these circumstances. The tighter the stop I can run, a justified stop, not one that doesn't allow the trade to breathe, then the better for me. I don't want to spend too much money to find out I'm invalid. And obviously judging invalidation is a skill in itself that comes with experience. So the market's not far from stopping me out here for -4, which is fine. You take your loss and you move on to the next trade. I went into the trade accepting the possibility that it was going to lose. If you go into a trade thinking it's going to be a winner, then your expectations are out of synchronization with the reality, and that leads to disappointment, frustration, and letting a small loss turn into an account-blowing loss, which I'm sure plenty of people watching this have done before. And this final trade is using a pattern that's probably one of the most basic technical patterns you can have, and that's a double bottom. And the reason it's so well known is because it occurs quite frequently and is often a very good trade to take. And what's so good about this pattern is, particularly if you double bottoms at the daily low, is you don't need to run a particularly large stop in order to recognise invalidation, so you can have a really good risk-to-reward ratio. So once the price holds above the level, as it has done here, I want to be in the trade without hesitation, and then I can run a very tight stop of probably 3 or 4 points. and my target with this trade was to take 5 points. I think I had a 5 point limit order for it because I'd already traded throughout the day, and that was what I needed to make my daily target. And we can see here we've seen a nice reversal. I don't particularly subscribe to candle theory, although I'm not suggesting it doesn't work. I just don't know enough about it. I don't need it to trade with, but when a candle tends to lay a wick at the bottom and the body quickly goes above it, that can be an indication of reversal. But like I say, I don't base any of my trading decisions on that. You can take in too much information and have too much into the decision-making process for trading. I try and keep things simple, which is, as you can see, why I don't use any indicators. I just look at price action, draw some support and resistance lines that have often been there before the day's trading, and just have some moving averages. And eventually the market comes up and takes that limit order, so job done for the day. Slightly longer day, 8 until 4, but you've just got to be patient and wait for the market to show its hand. You can't force trades because that's when you end up losing lots of money. And if you're skeptical, I fully understand, as this industry is full of dishonest people. I just wanted to show you a screenshot of a Capital Spreads demo account, so you can be rest assured that mine isn't. Notice the red watermark there that goes right across the open positions, which is of course absent from mine as I don't use a demo account. But we'll move on to the summary now. So hopefully that short video gives you an idea of what we're about and what we do at FTSE Day. We try and put all the components in place in order to help people become consistently profitable traders. It's as simple as that. If you need anything else from us, or you want to ask any questions, or want to speak on Skype, or anything like that, and don't worry, we won't try and sell you anything, then the top 2 email addresses, you're more than welcome to email us with any questions. And if you use Twitter, I'm sure you recognise the @ symbol there. The first address is mine, where I sort of focus on trading psychology and talk about my daily trading. The second one is another moderator, Michael C., who's very, very good at planning. That's his specialty, and he also will tweet about his daily plan and trades he's taken. And the final one is our general FTSE Day Twitter address, where we talk about training sessions that are open to non-members and other things like that. So feel free to follow us. I'm sure you'll get something out of it. And again, if you've got any questions or feedback about this video, feel free to email me and I'll get back to you, and we'll have a discussion about things that may help you become consistently profitable. Thank you for watching.